Good day, fellow investors. Welcome to Arabian Property Pulse, your weekly podcast dedicated to the real estate market in the Middle East. Fueled by coffee and powered by our sponsor, NelsonPark Property, I'm your host, Jeffrey Asselstine. Welcome back to Arabian Property Pulse. I'm Jeffrey Asselstine, the founder and managing director of NelsonPark Property. I'm here to talk to you today about some good quality economic data and some research reports that I've been reading over the last week or so. And I wanted to share with you a few key takeaways, which I found to be really quite fascinating. So the first report comes from the Bank of London in the Middle East. A lot of you will know of this bank, but for those that may not know, it's a Sharia-compliant bank headquartered in London, and it provides real estate-focused wealth management solutions, commercial real estate finance, and savings products. Full disclosure, they're not an advertiser, but BMLE, if you want to be an advertiser, feel free to reach out. So what does their report have to tell us? Well, some recent research from the Bank of London in the Middle East predicts the GCC investment into the UK property will grow to 3.4 billion by the end of 2026. This is 15 to 20% up this year alone. The UK continues to outpace the US in attracting Gulf capital. So a lot of people will be talking about what's happening with investments in the UK, what's happening with investments in the US. But for the GCC money, it continues to really be focused into the UK, basically thanks to its political stability and transparent market. This includes strong interest in logistics and warehousing assets, seen as resilient and long-term investment plays. What else is happening in the region? If we look at Qatar, where I am right now recording this podcast, Qatar's second quarter 2025 property market posted its strongest performance since 2020. 2020 is the year of the pandemic, as you may remember very well. But since then, we had an incredible World Cup in 2022. And now in 2025, we're having our best market in the last 5 years. So in the last quarter, 8.9 billion Qatari riyals in transactions were done, up 30% on the last year. Leasing rentals also surged to over 58,000 contracts in the first half of the year. This is a 26% year-on-year increase and a 6-year high. Now, we've felt in the market that things are starting to improve, but this kind of data speaks volumes of what's actually happening in the market. If we just shift to Dubai, where I was the week before, a few of the bellwethers of the market. Emaar Properties' first half net profit rose 33% to 7 billion dirhams, fueled by a 46% surge in property sales and 62% rise in sales backlog. That's pretty impressive numbers, no matter how you slice it. In the second quarter of 2025, Dubai property sales reached an all-time high of 184 billion, over 53,000 transactions, with off-plan sales accounting for 2/3 of that. That's incredibly strong, incredibly robust. In the month of July, moving into the third quarter now, recorded sales of 63 billion. That's 27% year-on-year increase, helping sustain transaction volumes. Apartment prices are still increasing, now 4.7% in the second quarter, and nearly 24% year-on-year, although it's starting to ease slightly from what we saw in the first quarter of the year. ValueStrat, our friends in the valuation business, showing villa prices leading the surge of 30% year-on-year, with Palm Jumeirah, Jumeirah Islands, Emirates Hills, and the Meadows seeing the highest gains. For those tenants who are wondering what's happening in Dubai, rental growth is moderating. Annual residential rent increased now on average around 8.5%, down from significantly earlier highs, but still an increase of 8.5% over a year is fairly robust. So what's the takeaway? UK commercial real estate remains a magnet for GCC investors, supported by strong fundamentals. Qatar is experiencing some of its best market in recent years, with both sales and leasing activity increasing, and Dubai continues to shatter records. Bottom line performance strong, prices and demand robust, though watch out for moderation ahead. Thanks for tuning in again to Arabian Property Pulse. Until next week, stay strategic, stay invested. Hopefully that gave you something to think about. Enjoy your week, and if you need assistance with any of your real estate needs, get in touch with NelsonPark Property at nelsonparkproperty.com.